This is Rod Kusanen, Spoon for Risk, May 3rd. Here we go. Pre-market, let's take a look at the overnight market first of all. Very interesting pattern that we see here. At first, we want to look at where we closed. Now, we closed up here at 86. Almost the entire period, and in fact, really the entire period of the market was below the close. And that gives us a very strong bias for today, indicating that the probability that the market will be down today is very, very high due to that fact. Now, that of course could change if we were running into a very strong area of support, so we'll be in need of looking at that. But the first clue is to look at where the close was and how much time we spent either above or below the close. And in this case, it was all below. Now, that having been said, we also look at the pattern here. And if we just use this as we have it right now, we've got just a little bit of a extension to the low side as well as to the high side. But what's troublesome about this, and I'm not quite sure how that happened. Well, looking at it from the standpoint of the using 4 o'clock as the open, because we do have a little bit of activity that took place at 3:30. But yes, the open was at 84, so we gapped down a couple of points in that respect. But in any event, we've got very low volume right up in here at just about 84. And the open was at 84 as well. So we could return back to 84, giving us an opportunity for a little bit of a rally up. And of course, potentially proceeding even higher. But we're definitely in a downtrend. So we need to be ready to take a short trade fairly quickly. Now let's see where this is headed, because our low value area is down here at 81, and we want to take a look at the bigger picture here. All right, looking at the big picture here, using the composite profile from the 24th, we've got 80.25 as our low value area. We're very close to that. That could serve as a barrier to further drop, but really we've got this area of repair that we've been watching now for many days, and that's gotta give. And with everything down as much as it is today, it wouldn't be surprising if that happens. Now, it doesn't mean we're going to go there immediately. A bounce off of 80.25 and rallying back up into that area of 84 is entirely possible. There's lots of different variations of this, but overall, yeah, this is a downtrend, and we just have to be ready to take advantage of any opportunity that exists to get us there into that area. And we're already dropping into 81, as we speak. So let's go back. Now just below 81 where we are now, the low value area from the previous couple of days, starting right in here, is a potential target, but the area of repair in there is what concerns me, and especially when you've got, let's look at this. Yeah, it's that POC is also at 80.25. That's at 80.25. So let's just forget that. Yeah, 80.25 here. Okay, so that's a big number. We'll just have to see if we've got buyers down there. And no doubt we probably will. So, what else can we take a look at? Just checking the overall premium on a 1-minute chart, we had a little bit of an uptrend in the latter part of the day, especially right in here. You see how the premium had moved up, and we did see the market rally, but of course that's all changed now. So we don't really have anything here to be too concerned with. Now we might mention, however, that yesterday's open took us down to 81.75 as the market dropped off shortly after the open. Okay, so let's now look at the last thing that we want to look at is where should we open on the INX? Where should we open? Now we closed, as you can see, at 91.17. Now we closed at 86 here. Now we will open 5 points, roughly 5 points. If we open at 81, we should be 5 points lower on the INX. Okay, so that should bring us to 23.86. So that's where we should open, 23.86, roughly. Now, what if we open considerably higher? Well, if we open considerably higher, that gives us all the more reason to short this. But if we open considerably lower, all right, that could give us a bit of a reason for a bounce, a quicker bounce, to move back up to sort of balance where we should be before it begins to move down. So that's the philosophy there. Okay, here we are at the open, and we opened down on the INX, just about where we were supposed to, and we're continuing to head down, and looks like we're going in that direction of 80.25. Obviously not down yet. 80.5, $80.25. We took a short right out of the gate. And a long right at 80.25 and got filled on that, believe it or not. Okay. Now that's our little profile here. A lot of area of repair. Now if we can make it to 82.25, we'll be happy. We've got a little trailing stop on this. It looks like we've got this area repair down here, so I think we're about to get stopped out. All right, this looks like it's going to need some repair. It's just uncertain at the moment if we're going to go much higher just yet. The premium's not showing us much here, but we are moving higher. 82 not. Yep, there we go. We got filled. Looks nice. Now, this area of repair in here, back at 84, is a potential target. Okay, we'll come back in a few minutes. Okay, here we go up again. Came down to the POC here on the INX and had some nice divergence right in there and bounced. Same is true here, low value area here, POC here, bounced. All right, let's see if we can get the premium above these levels. As we can see, we need to be at least about 369. Otherwise, this is just going to fall off again. So 369 on the premium, or at least 360. Okay. But as you can see, we may have a hard time getting above 86.24. And it's not wanting to go above the upper value area at the moment, which is at 86.01. 86.29 is really the projected area. And that does not give us a lot of room to try to move back into this area of low volume. It all depends on whether or not we can just smash through this area, and that remains to be seen. It's kind of looking like that's what it would like to try to do, and we will just have to see. So I'm long with a trailing stop. And it only seems logical to me that we're going to try to go up there. This is where it can get really tricky, because in as much as, you know, we may see divergence, this thing, because it hasn't gone as far as it wants to go, it'll show you divergence on the premium, and the next thing you know, you think it's short, and it turns right around and just takes you completely out of your short and goes up and hits this area. So that's why I'm just using trailing stop, good point below. Now I'll get out at 84. Maybe not 84. No, maybe 83.75. Yeah, 83.75. Look at 83.75. If we can make it up that high, and if it begins to flounder, I'll just move my trailing stop to maybe half a point, and I'm very confident of being stopped out at that point. But as you can see, the premium is really not cooperating. A little bit higher now, but not much. Okay, there we are at 850. Okay, I got stopped out at 83. That was it. And you can see the divergence here. Now that made more sense. I think we're still gonna test that. See if we can't make it So there was your divergence. And this made sense. It made sense to short it there because if you look at the where the volume issues were, 83.75 couldn't get hit. Now, what has to happen if this is going to continue to go down? The premium has to continue to drop, and we are already seeing some divergence in here. So now if you're short, got to be careful that this thing doesn't come back and bite you. Okay, we'll come back and reanalyze in a few minutes. Now looking at where the what is happening to the premium here just gives me reason to expect that this is going to move back up. Now, maybe not immediately, but that's certainly the direction that the premium is suggesting here. So move back to at least 83 and a quarter. That's I think a fairly good probability. There we go, 83 and a quarter. $83.50, back to where we were. Now we have a totally different picture. Totally different picture. We're still going up. We're still going up. That big spike up here, all right, which we didn't see over here, all right, now gives us concern that we may continue on up past 84. But we've got to get past 83.75 first, and as we can see, the market didn't want to go there even with that big spike up. But so what we would normally see happen here, and this is just the general picture, you get about 3 attempts to do this. This is number 1. Now we should make it to 83.75 in attempt number 2. And I'm saying this is attempt number 1, not this, only because at this point is where we saw the spike in the premium. We didn't see it here. So it could be only one more attempt, or, you know, we could be completely wrong, and it's made its last-ditch effort already, because we've touched 83.50 once again here, lower read on the premium, but what are we actually doing? We're carrying a short. I'm taking the risk. But normally what we'll see is 3 attempts. 3 or better. But 3 is usually a good time to take a short. So what I would expect to happen here is this is 1, this is 2. If you want to use this as 1, we'll go up. We'll go up one more time and test this high. We'll probably bounce here, probably, but not absolutely. Give it one more try. Yeah, and as I look at the what's happening with the profile here, this is a very poorly formed profile, very poorly formed. The low down here makes no sense, so we're going to correct that. But the high up here isn't so good either. So maybe we move down all the way to the POC. It's 85.82-ish on the INX. Can't see it quite so well because the profile is obscuring our vision. I can correct that. I might as well do that now. We can take that down. All right, we're a little too high here. This should come down and take us to at least 81.75. Premium is coming down as we thought. There we go. And perhaps now we'll come back up. Okay, we'll come back in a minute. There we go. So as you see, we took a little long trade there. And once again, 83.75 is that's the problem area. And we got back to 83.50 right quick. And much lower read on the INX when we did. Now that's troublesome. That means that this is what you would expect to see. Okay. When if the ES is at an equal high, and the INX is at a higher high, they'll get a lower high on the premium. But as you see here, when the ES is at an equal high and the INX is at a lower high, you get a higher high on the premium. Now that can be a little deceptive because now you're thinking this is going to continue on up. And that's exactly the way we would tend to read it. But with this biggest, the divergence here as big as it was, the INX is very divergent, and that would suggest as well, another way to read this is that that was a good reason to short it. It was a good reason to short it. Now, I didn't. I didn't. Oops. So I'm going to have to look for another opportunity. But this is a good lesson, okay? This is going to you're going to read this as saying, oh, we're going back up. It's true, we might. But a big divergence like that could have been read in just the opposite way. You could have said, let's short this because this is so divergent. The INX is divergent. The premium is higher high. That's deceptive. But you got to be aware of that. Okay, we'll come back. Okay, that's not looking so good. We did not make it any higher, and we're coming down. So that was a misread. I won't call it a misread on the premium. Just didn't interpret it properly. But it's good to know why this showed up higher. It's because this was so much lower. And that made this very divergent. So now the question is, are we going to start to fill that area of gap below 80.25? Because it certainly looks like that's where we're headed. All right, we'll come back in a couple minutes. Try to get in short. There we go. There we go. Broke right through that low area. 79.25 is the next obvious area of potential support. We haven't really looked at the YM, or pardon me, the INX. We should do that. We're already below this level. $79.25. Could be a target point, potential exit, as would be this area here on the INX. But it's good to know where we're at here. We're breaking below that level. Again, 77.5 takes us right to the low here. 77.5. And, well, of course, intermediate is 78.25. So we've got room to go here. And I think there's every reason to expect this. Every reason to expect this. But what I wanted to do is just take a quick look at the INX feed. 8330 was the low value area. Let's refresh this chart. All right, we refreshed that, and actually that low was 84.43. Of course, we breached that level and that area. The low takes us right down here. Certainly a couple of points below where we are now, but this is clearly an area that needs repair, and it looks like today would be a very good day to expect that. Now, we're going to be coming up on the IB calculation, and keeping in mind that Wednesdays have better than a 90% probability that the IB is going to be hit. We've got a very good probability of going right down there. Now, we're going to show you how to calculate the IB prior to when the IB is actually calculated, just to get an idea of where we may be headed. So what we do is we come over here to this particular web page that gives us a standard deviation calculation. All right, we plug in our high and our low thus far. Our high was 2383.50, low of 2379. If that is the actual IB calculation, then we can add 2¼ points right here, the population standard deviation, 2¼ points to these numbers. That would take us down, all right, 2¼ points to 76.75, 2376.75. All right. And 2376.75 would put us into the area of correction, the area of repair, down here, which is exactly where we need to go. So on that basis, I think we need to stay short, take shorts wherever possible, and plan on holding that, because there's a very, very good chance that's exactly what's going to happen. We're gonna blow through this low, and there you have it. So you've got another tool there just to do somewhat of a premature calculation, and so that's what we can tell you. All right, so we've moved back up, to right around the area of the point of control. And once again, we see the premium dropping in here at the high. I was kind of expecting us to go a little bit higher. Thus far, we have failed to do so. But we're short again at 82.25. We'll see if we can't improve on that just a bit. And we'll come back. Now we're shorting it up here, averaging in, and that looks like it is ready to continue on down. That nice little bar on the premium. Well, we will at least make it to 81.25. Now we said this area of low volume in here was a potential target. Now we didn't quite make it there. Okay. This is not very well formed. You can see the tail here. Nothing up here. That's not very well formed. So that's got me just a little bit concerned here. Well, I've come over to take another look. This is the, we're now looking at the ES from the close. And if we looked at this profile from this angle, then we don't have a problem. But just the day market, that's a little bit of a concern. But we have no other choice but to be short in here. And 8250, as you can see, is the TPOC. $81.25, the low value area. Okay, we'll come back. We're short. That's the overall goal, and we'll short it as much as possible. If we get above this area, I will take a little off the table right here at 81.25 because of this area in here I'm not real confident about. So I'm going to take some profits down here if we can get there. If we can get there before we go higher. If not, we'll just hold it. Now the upper value area of just the day market here is placing it at 83. So that's another opportunity that we have to try to get in here. And even above that, but much beyond that becomes a little bit more of a concern as to just where that's going to stop. But this is another area where we have some contracts waiting to be filled at 83. Okay. All right, we've taken a little bit more off the table now. And once again, all right, now look at this carefully. We came up here and we hit 82.75 twice. Here, we were at 368. Now we're higher at 349. Why? Why is this higher? Because this is lower. Okay, just like it was over here. So that can give you a little bit of a false sense because the read on the premium is higher here, the feeling is that we're going to go higher. That's really only true if we've got a higher high on the premium, a higher high on the INX. Now that can happen, and that's what would need to happen in order to confirm this. But a lower high, okay, such as this, will give you this. So you got to know where the INX is. This is divergent because of that, okay, even though the premium is higher. Fool me once, but not twice. We're short. Now I just wanted to take a look at the where the premium was, the threshold, if you will. Right down here, 423. Now we need to be below that, you know, in order for us to continue to see us move down. Of course, we had this big spike down here. That was a real good indicator that we were going to come down further, which of course we have done so as a result of breaking through that low. And as soon as we did, we went lower, below that level. We were pretty much maintaining lows that are below that. So we're continuing on down. We should be able to get down to 79. So should you think about trying to get out of this before we hit 79? Well, I don't want to tell anybody what they should do, but logically, just logically, we haven't hit another new high, have we? We've hit lower highs, so we should be getting lower lows. And that low, of course, for other reasons that we've already discussed, doesn't look like it's going to be the low of the day. If you were going to get out, however, it would only make sense to be getting out at least at the low of the morning, because of the very strong probability that we've reviewed thus far that the IB, with an over 90% probable success at dropping us down to the first standard deviation, it would really make no sense to get out before we at least hit the low, or at least maybe take some money off the table in the case, you know, that we might get another rebound and we have another opportunity to short. Now that would make some sense, but not to get out completely. And here we are. And so see what happens. I hope you understand why we said what we said. Okay, so there you have it. Okay. Now that 10-second chart that we're running here left us with a gap. We're going to go back up to 79.50. We've got to hit that level. There's too much of a gap there. Okay, so we're down at 70. We went to 78.25. That was the low here. Okay, and 77.50 is the low there. Now we're not done, but we did have a little gap up there. So, all right, we'll come back in a couple of minutes. Oh, and there's the IB plot at 76.75, as we had calculated earlier, and you get that same read from this chart. Now we're continuing to drop, but there's your read. Okay, very good. Now the so-called home run would be to take profits there at 76.75, which we're just about at right now. We're at 77. And we can expect a bounce there. Most definitely, we can expect a bounce. And that might be a good place for it to be bouncing. There we go, 76.75. That's a good place for it to potentially bounce and go back and take care of that gap that we saw earlier. So there was your home run approach. But now if you look at where that places us here, that only gets us below the 77.50 area by just a few ticks. Okay, we've got this big area all the way down to 74 that is yet to be filled, and we're still dropping. And it looks like that area of repair is a target. All right, so once again, that's the range from about 77 and a half down to 74. So the 3.5 point range. A lot of money down in here. All right, let's take a look at something else I'm a little curious about. Let's refresh that chart. Okay, still going lower, obviously, on the premium. But up here, got this gap at 79.50. And based on how this is behaving, I really wouldn't expect it to just fly up there, because we haven't really had an area of support down here. All right, so what I really wanted to look at was our good old profile here. Ooh. Oh, look at that. Look at that. Oh my. We've got all sorts of areas of repair in here. Goodness. All right. So it would seem logical that it's going to try to make it up to this line, roughly speaking. That's not precise. That little profile actually ends right about there, which is almost exactly where we just hit. I'm just looking, let's blow this up. Okay, that's right there. Okay, just barely below that line. So it looks to me like we're going to try to make it back up that way. And start working on that area of repair. This will come down, come back up, but we're not at the low yet, which is kind of interesting. We've got so much work to do down here first, but we, this is where it becomes really kind of tough to know. Are we going to go down and work on the big area of repair down here? Are we going to mess around up here and move higher and fix all of this before we start heading down, really heading down again? And that's really tough to call. So now is where your indicators and the premium becomes really crucial to be able to properly read, how the premium is telling you to trade. So let's go back there to our 10-second chart. Now, you've got to, at least for the moment, just forget about that. And look at where we've been. All right, we had a pivot. Yeah, right here. So what I'm going to do, that pivot is right in here. And I'm long, by the way. I'm long. I think we're going to go up here. 76.75 as we come down to that area, or 76.50 as we did over here. This is a good place to try to get in. But what I was going to say, I'm going to clean up this area so we can see more clearly where the threshold level is. So I'm just going to go in here and just change this. I think what I will do, no, that's not quite what I want to do. See, if I do that, that's going to give the 460 area the oh, I know what I want to do. Okay, we're gonna run the premium after. So, okay. I want one level up here. And so I'm going to change the start time. That long is working. I'm going to change the start time to 8:54. Oops. Didn't give me what I wanted. Let's try this again. No, let's do it this way. Okay, that might work. All right, so all right, so that's my threshold from here. We dipped below that a little bit. We're coming down again. big divergence right there. But let's go and I'm really interested in what we're doing in here to repair all that. And as you can see, we repaired already. Got a little bit more to go. Okay. Now, for what it's worth, the low here was at just below. No, it was at 81.15. Okay, interesting. It moved up to 49. All right. So about 0.3, 3/10 of a point was required in order to turn the stochastic, okay, giving us a sense that once we've moved that high, it's likely we're going to continue. Now, obviously, we didn't this time. We didn't. But it's good to know that once you've moved about 3/10 of a point, you've got a good chance that the stochastic is committing to a direction. Little trick to keep in mind. This actually came down here. All right. And that makes good sense. And we've obviously moved up again, and you see how the stochastic is moving. So this might continue right on up. All right, we'll come back in a few minutes. See if we can't get way up here and repair this area here. What we need to do is to get up to 79.5. That's 2 points above where we are roughly. 2 points above where we are right now. And 81.5 to 82.5 to 83. We'd have to get beyond this. We'd have to get almost to here to fill that gap. Now we'd even have to go beyond that. Yeah, we'd have to go beyond that. No, wait, no, pardon me. From the low there. Well, we might make it. Okay, let's just watch. Watch how this gets repaired. Here we go. There it is. Nice and repaired. Now, about in here is where it's more than likely going to turn, if not already, but it'll come in. Well, what I see happened here is it went right to there, the low right in here, and the high, but I think I mean, we obviously have to go higher, but so the question is, if this is going to turn down again, where is it likely going to turn down? All right, so really we want to go beyond this high volume node, which isn't very high, but somewhere in here or in here is a place where it's liable to come back down. But really, you're not too concerned about that, only because you've got all that area of repair in the first place. And we're only 2 ticks away from that gap fill at 79.50. And so I'm going to get out of my long trade at 79.50. And you see, we've got to get higher just to repair this. But let's go ahead and go back here for a minute. Pardon me, that was 79.75. I thought it was 79.50. 79.75 will fill that gap. The gap will be filled. Now, safely, if you exit at 79.50, that makes good sense. But then again, your low value area, which is also a target, now that could just as easily drop to 79.75 by the time we get there. And it, just a couple of contracts wind up getting filled up there. So 79.50 is a good place to exit a long trade here. That's conservative, but I think safe. All right, we'll come back. And then we're going to finish up this video. But we're not done going down, by the way. No, we got more work to do below. All right, so we're looking to repair that area. We're looking to fill this gap. There's very high probability that's going to happen. And we're pretty much remaining above this threshold, but there's a lot of evidence that that's not real secure. I'm really thinking, let's just look at this. Let me show you something you can do with these lines. Oh, come on now. Okay, so that low really corresponds. Watch me move this. With 404. That's 404 is the low. That's not quite right. But you can see that we've dropped much lower in here and in here. Okay, so that's kind of indicative that this is not real proud with those prices. This is safe, but that's not safe. $78 could be a good turning point again. And that's low volume. Right around 78 is low volume. So it might take off again if we drop into 78, 77, 75. And let's take a picture of this. This is an area of repair as well. So yeah, I mean, that's entirely possible. We'll just go down here, mess around in here, repair that, and then head back up. We'll come back. Okay, very good chance to now hit that 79.50. We've been hitting higher highs on the ES and lower highs on the INX all morning. Now we are right at 78.75 right now. Okay. So we've got 3 ticks to go up. And we're going to hit it. There we go. We just hit it. Okay, so we're out, and heck of a day. Really nice, and it ain't over yet. It ain't no. Oh my, nice. Nicely done today. Oh wow. Yeah. Okay. And we're not done. So now that that gap is filled, we still want to look at kind of fixing that area of repair before we likely will head back down. So let's see here. Okay, we're just fixing that area. Okay, up to the low value area, we're moving higher, 80.25. We're just about done there. Let's just see where we're at. And maybe a little bit higher, maybe really. It's kind of hard to say, Now I'm going to take these lines away. This one in particular, move that up to there, right? Because that's an area of slightly higher volume. That would look like an area of potential resistance. And I'm also looking at the, I think we better take a look at the, let's change this around. Now we're right back to 80.25, which was that low value area, the big one. So that's of interest. But what I'm really looking at is this. Okay. Let's get that out of the way. So the TPOC is right there, but the, goodness, really? We could be going all the way back up to the TPO. Oh my goodness. We could be going up to the TPO. That's at 82. Wow. That would be surprising to me, but this area of low volume right in here is at 80.75. Did we hit that? Yeah, 80.75. We just hit that. I wouldn't be too proud. Okay, we'll just come back and see what happens here. But point is, 82 is the TPO, but we've got low volume right there at 82.75. And that may be as far as it's really interested in going. I keep on saying 82.75. I meant 80.75. And 81, slightly lower volume on the volume bars of the matrix. So it may not really want to go up there. But anyway, that's what we see here. Now let's look at what we see here. I don't think that's especially a significant level. But this is. Spent a lot of time there on the 28th. May not make it, but that would be a target. That's a TPOC from the 28th, and that places us a little above 85. So now wow. That is just a bit surprising, because to get us to 85-ish, we have to go beyond here, and that takes us right into this low volume node in here. Okay, I'd say we are still on the way up. We are still on the way up. We're not done yet. All right, we'll come back in a few minutes. We've kind of overextended our video time here, but I think it's worthwhile just documenting a potential bounce in here off of the well, this is still the area of repair down here. Well, that's an area of repair. Okay. So down at or below that line slightly is an excellent place to get into a long trade. It's good 3/4 of a point below where we are right now on the ES. And this low value area here doesn't really make a lot of sense to me. Unless I use that as a basis for that. So yeah, it might not want to go down there. But if it does, it should drop all the way. Well, I'm long at 80. Okay, we'll come back in a few minutes, just document what happened. I'm really interested in seeing if we get above 85. That's that. That intrigues me if we can get up there. Because if we can get there, then we can get to 85. We can get to the POC here. We'll come back. Okay, we're just making it up to that 85 level, not quite to the 82 POC on the ES, but we've just made it at least to fill in this area of repair here. And where we go from here, that's a little hard to say. We're very close to the POC on the ES at 81.50 right now. And with that somewhat being the target, you can see this area of low volume right in here on the INX, and making the POC here really a target. So kind of looks like that's what's going to happen here. Very surprised of the amount of strength that we got to work into these areas of repair. But as you can see, even as we've gone up there, we've still got a very poor situation in here. And the probability that this is going to turn down, I think, is still pretty good. But whether we're going to hit another low yet this morning, that's a little hard to say. But come this afternoon, I think there's a very, very good chance, that we'll breach that low. The patterns today, and in fact all of this week, have been very volatile. And with good data, you've been in a position where you can kind of detect how the market's going to behave, but you got to have the data. And this particular market profile, using the INX specifically, is such a good tool because you can see what you cannot get using the TradeStation volume bars unless you pay for an extra data stream. And I've not done that. I don't see any need for it. This is doing the job. But you could do that, and that would be interesting to compare if we had the data. We don't. But this is more than adequate in my estimation to at least identify these low volume nodes, as well as a very accurate, very accurate market profile. So with that thought in mind, we will conclude this video, and I am Rod Kusin in Spoon for Risk.